Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of XRP. We're going to be reviewing the most recent price action for the token and we're also going to be reviewing where I think things are likely to go next. As I get into today's video, if you do find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you're watching this on X, then why not go ahead and give us a follow? And of course, if you really want to help us out, you can go ahead and I'm going to call it a retweet. I don't know what we would call it on the new platform. Is it a re-X? Yeah, I don't know. So whatever that is, do that. I think that's really appreciated. Let's go ahead and kick things off, though, jumping down into the world of XRP, kicking it off with the 1 hour time frame. So on our 1 hour time frame, we have bounced up quite a bit. We're above the hourly 50 EMA and we're approaching the 200 EMA here. Now, we are still tracking an impulsive breakdown on XRP, but the higher that the wave 4 goes, the lower that the wave 5 has to go. Okay, so our target keeps getting deeper and deeper and deeper. Now, there are a couple of other options within our structures here that we could consider. We could be considering a WX, Y, X, and Z as a possibility. Ultimately, at the moment, we have to run on the rules of eight-way theory, which essentially is we went down deeper than 1.618 down here on this particular drop, and therefore this particular drop should be considered 5 waves. Okay, now it can, of course, invalidate, and for this to invalidate or to prevent us from slipping down into these lows, the wave 4 has to cross the wave 1. Okay, so this is an unbreakable rule. It's not allowed in a 5-wave impulsive pattern. Wave 4 is not allowed to cross wave 1. So if we want to prevent ourselves from creating an impulsive 5-wave pattern to the downside, then we need that wave 4 to break up above the wave 1, which would be 59.739. Right? XRP would have to rally up higher than this in order to prevent us from going down lower. As you can kind of see, we are kind of getting rejected here just south of that 200 EMA. This is not a good sign for later today. We are looking for a weekly close on XRP as well. So there's going to be a bit of a battle between the bulls and the bears. We can see at the moment, if I were to measure the distance here, because of the Fibonacci relationship between wave 4 and wave 5, our wave 5 is at the moment continuing to drop down lower the higher that the wave 4 goes. Okay, so it's always great to think, oh, we're recovering. But if you do not get above 59.739, if we cannot go higher than this level, then unfortunately all we've done is created a worse situation because we have to come down deeper to kind of fill it out, right? So essentially at the moment we're talking about 35 to 39 cent in order to kind of play this pattern out. This is an inevitability, right? These are the patterns that you have within 5-wave structures. This is an inevitability unless you can create an invalidation for it. You can of course truncate, and what we mean by this is that our 5th wave target can fall short of this range if we have a diagonal. Okay, so if we start to see a diagonal pattern here, we might find that we fall short of our target. Okay, and we'll be looking for more of a double bottom around 41.9 and potentially a little bit higher than that, but it would be unusual and very irregular. Okay, we'd start to maybe look to explain it in a different pattern if that is the case. So we are where we are with this one. If you don't want to go down into these nice lows for accumulation and you've already accumulated and you just want to go up, then you're going to be looking to target out 59.739 for the close. Well, I say not close, but just kind of get this pushed up there to kind of invalidate this low coming down. Now, when it comes to invalidations, it's probably also worth noting that just because this particular pattern would be considered 3 waves rather than 5, it does not mean that you can't go down in another 3-wave pattern that takes you down into these lows anyway. It just means you're going through a different path to get there. It's important that we understand that at the moment, we are not in a very strong position on XRP. Despite the ideas that are out there, they're not really based on any solid analytical kind of approach. You can't just copy some bars or some candlesticks from a couple months ago and say they look very much similar to what they are right now, so we're going to the upside. It doesn't work that way. Essentially, we have a very different economic climate right at this particular moment in time, and that's going to be causing a fair amount of fear in the space. So do expect to see some downside. Now, when it comes comes to our hourly chart here, we are overbought. We're also overbought on the 1 hour time frame. Let's go ahead and just bring that stochastic RSI up here for a second. As you can kind of see here on the 1 hour time frame, we're high. We're up in this overbought area. On the 4 hour, we're up in the overbought area. On the 8 hour time frame, we're almost up in this overbought range. Okay, this is not a positive thing to be looking at for XRP. Now, the momentum indicator that is the stochastic RSI is very sensitive to price movement, but it doesn't predict price movement in itself. It's just showing you that there isn't an appetite for really buying into XRP. And that's what this is showing us. It's showing us that we've gone from oversold to overbought in a really rapid way, which is showing you less demand, okay, essentially. So you go from oversold to overbought. Yes, you've had a bit of a rally, but it's not a strong movement to the upside. It's showing us weakness. And so as it shows us this, we have to consider what that might mean, which essentially will be that unfortunately price action is more than likely going to start to get rejected from these higher ranges, and we're going to start to slip on down. The 200 hourly EMA sits at 56.810, so this is going to be the main area of resistance in my opinion. As you can see historically here, this has not been a strong move. Once XRP hits this area, again, it kind of has been rejected. It's bounced above and below the 50 EMA quite a number of times over the last few days and weeks, but for the most part, our 200 EMA has been consistently resistance on XRP. So coming up to here again is not going to be a strong sign in my opinion, unless it can get a closed position on a daily time frame above the 200 EMA. I'm not so confident. Actually, on that note, let's bring up our daily EMA. Okay, so we can see here, actually our daily chart, I should say, we can see that we are currently above the 200 EMA on our daily time frame, and so we will be looking to see whether we can get that close. If we can get a close above this 200 EMA on the daily time frame, that will put us into a strong position. But as I said earlier, we are looking for this to be a wave 5, meaning that we do have to move down quite aggressively at some point, and we're going to have to kind of consider what that might mean. Okay, so what I'm going to do is I'm just going to tidy out some of these a little bit here. So what this means essentially is that if we cannot rally up higher or hold these areas that we're currently in, chances are we have to slip down again, probably closing below the 200 EMA, meaning that this will just end up with a wick above. So all eyes are going to be on today's candlesticks, specifically by the close of day, to see where they land, because this is going to either fuel the bulls to kind of continue a run upwards, create those invalidations, prevent us from slipping down even deeper, and maybe show some kind of recovery to the upside. Failure to kind of close above that 200 EMA is probably going to fuel the bears. If bears are going to feel confidence, there's probably going to be a few bull people that are probably going to be, okay, I'll just exit my positions here and wait for better entries. And so it's going to fuel a bit of a move to the downside. Take that with cascading liquidations of people who were going long, thinking that the bottom was in down here, and we're going to potentially start to see these fifth wave movements to the downside kind of come into fruition. So really, it's all on the traders out there over the weekend and retail investors that are trading over the weekend to see whether or not they can get these closed positions in these stronger positions, or whether or not by the end of the day things are going to start slipping down into even deeper and worse situations for XRP. Okay, so like I say, I don't have the magical answers to kind of say we're definitely going to do this. At the moment, the structures are very clear that unless we create those invalidations, we do have to go down. And at the moment, really, it's just a case of battling it out between the bulls and the bears as to which ones are going to take. I don't really mind which direction this goes. I'm not really going to be wanting to trade this one, in my opinion, but we'll talk more about that later. Essentially, all I'm waiting for here is to see a good indication that things are kind of finished. I want to see either a completed 5-wave move to the downside or an invalidation, and wait for the correction after an invalidation, and then kind of get into those long positions if that's what we want to do. Okay, but essentially here, we're in a bit of a state of play where it's a Sunday. We're waiting for daily closes. We're waiting for weekly closes. And essentially here, we have to let this one play out until we get better confirmations. Now, as I come up into the weekly time frame, you can see the damage hit was done here. Right, we hit the highest on the 382 area of the fibs. Obviously, we were targeting out 93.76. We went to 93.8 on the C wave high. We knew that this was going to be a rejection point, so we short up here to the downside. We were hoping that this area, this yellow box range here between 52 and 58 cent was going to hold. It has not held. We can see that we are at the moment actually okay. We're still finding support on the weekly 250 EMA, right? We've seen that we've wicked down here, but we haven't closed, and it's unlikely that this weekly close position is going to put us into a bearish situation on our weekly time frame. This still looks really good on the weekly. But you have to bear in mind that the weekly candles, each one obviously represents a 1 week period, and it takes months before these structures play out. Okay, so although this looks like it's holding up quite well, it does not mean that we won't see further downside on those smaller timeframes before we see upside here on our weekly timeframe. So we do need to consider that, yes, we see some nice stochastic movements on the weekly RSI, or weekly stochastic RSI. It's good to see that it's progressing down, but it hasn't bottomed out yet. And although this wick is looking pretty interesting, a nice shadow here, it's showing us as an appetite for a bit of a bounce. Chances are that we're going to get a good positive close, but still slip down a little bit deeper on those lower timeframes, and then hopefully close back above this time next week. And that will give us a little bit more confidence to think that XRP is actually finding good support in this range. A little bit deeper than I was actually initially hoping, but nonetheless, it is what it is. What we don't want to do here is actually see a closed position below 52 cent. Closing a weekly candle below 52 cent is basically just confirming that our area of previous resistance is still resistance and we're unable to rally above it. That is going to be a problem because it could allow us to slip down deeper than the 50 and 200 weekly EMAs in the coming weeks. So there's a little bit of thought there that has to kind of happen, and we'll have to see how that one plays out over the next kind of couple of months or so. But for the most part, at this point in time, I'm not too concerned about the large time frame, more concerned about the smaller time frames like the hourly, the 4 hourly, the 8 hourly. Those ones are not looking anywhere near as strong as, let's say, the daily and, of course, the weekly time frames. So let's bring this up, not into exchanges, into data, if I hit the right button there. Because on our data side of things, we obviously have our membership website, membership.𝗕𝗘𝗪𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏𝗃𝗏 have a 7-day free trial, so go ahead and look at this at your own leisure, and you'll be able to kind of see some of the really cool stuff that we do for our members. I won't go into all the nitty-gritty of it in the video. You can click the link below if you're really that interested. Ultimately here, though, we do have on-chain data for Bitcoin, Ethereum, Cardano, and of course XRP. We're going to jump on over to the XRP data because I found a news article that got me interested. But obviously we need to look at the data to kind of give us an idea as to kind of, whether or not this is something meaty, meaningful, or just noise in the space, right? And so the article in question is this one. It's Ripple. Whale sends 150 million XRP to 𝗕𝗘𝗪𝗔𝗥𝗡. Is a sale imminent? Okay, so the market experienced an abrupt downturn, liquidating 1 billion in leveraged positions as Bitcoin declined. Whale Alerts reports a massive 150 million XRP transaction to 𝗕𝗘𝗪𝗔𝗥𝗡, right? And this is quite an interesting one. So let's see what's going on in here, right? So during the late hours of the 17th, the market experienced a downturn, liquidating leverage positions. We know all of this. Ripple XRP has been severely impacted. We've seen this move to the downside. We also saw that SEC's appeal was approved. And so, there's a little bit of a compounding in there. Now, within the same timeframes, XRP's price plummeted by a substantial 15%, leading to the liquidation of leveraged positions surpassing 24 million. We'll talk more about the liquidations in a moment. This decline could just be an initial sign of greater challenges for XRP. Whale Alerts, a well-known entity tracking significant cryptocurrency transactions, highlighted a remarkable development. A massive transaction involving 150 million XRP has been initiated. This considerable amount equates to approximately 77 million. Greatly amplifying the possibility or the possible consequences. The recipient of the transaction is a renowned Korean exchange 𝗕𝗘𝗪, right? And so you can see the details of this here. Now, within here, what we don't know is the origin wallet. What that was it someone who's self-custody? Was it on an exchange and those kind of things, right? That's not so clear. But what is interesting here is that when we come over to the on-chain data and I take a look at the wallets, obviously we have the ability to track wallets that have over 1 million XRP in them, right? And well, we can actually see that yesterday there were 2,120 wallets. This is actually down in the last 7 days, 0.28%. Okay, so 150 million XRP entering the ecosystem is a pretty substantial amount. So if they do decide to flood the market with excess XRP, whilst there is very little demand on, at least from the buying side, on the 1 hour, 4 hour, and 8 hour, that is going to basically drag the price action of XRP significantly lower, in my opinion, completing the idea of those 5-wave structures, right? But we do want to note that actually it's a very small percentage of the wallets that are holding over 1 million XRP, right? We're not seeing like a cascading effect of multiple wallets that are holding over 1 million XRP, and they all want to kind of liquidate their positions, or they want to kind of, dump on the market. We're not seeing that kind of activity. And instead, for the most part, we see positivity across the different time frames that we've kind of got called out here, right? 7 days, 30 days, 90 days, 180, and 365. So from an XRP standpoint, wallets that have over 1 million XRP have actually accumulated above 13.43% in terms of the number of wallets in the last year, right? And although that has been reasonably flat over the last 3 months and even flat over the last 30 days, as in there's not much activity going on here, we can, of course, acknowledge that actually a lot of accumulation has happened in the last year or so. So for the most part, I'm not overly concerned, but it could be a catalyst to see those larger 5-wave patterns playing out on those smaller time frames. So we want to be a little bit cautious with that. Now, if I come back up into our data, we obviously have our overview. I talk about this a lot, right? We have 969,000 transactions at a cost of $1,200. 23,000 active addresses. The average transaction value is actually $2,700, so it's incredibly cheap to transact. We know all this. This makes XRP very attractive and very much designed to do exactly to move money around, right? It's fit for purpose, right? So it's good to see these kind of things. From a liquidation standpoint, we've had $4.4 million. In fact, actually, we'll probably pull this over into the exchange section. So $4.4 million of liquidations across the exchanges here. Bybit was the exchange with the most amount of liquidations at 2.29 million in the last 24 hours. 16.59% were long positions and 83.41 were short positions. Again, it's been quite a bit of a run upwards. The higher that wave 4 has gone, the lower that our wave 5 will eventually go. But obviously trying to do that short and trying to kind of make sure you have good risk management, make sure you've got your stop losses in good places, quite difficult, specifically on those wave 4s. Those wave 4s can sometimes actually be very, very aggressive to the upside, specifically when that wave 1 is sat quite high as well. So we need to be a little bit cautious here. We know where the invalidations are. If I was to short XRP, I would be making sure that my stop loss is above the wave 1 low point, so that we can make sure that if we only want to get liquidated if, of course, we actually break the structure. If we don't break the structure, then, we want to make sure that we're capitalizing in on the move to the downside, which I'll talk more about that later. So it's interesting that a lot of short positions have just been potentially either trying to grab a falling knife and it just hasn't worked, shorting all at the wrong points, more gambling than looking at it from an analytical lens potentially. But interesting nonetheless. So Bybit equates to 50% of all liquidations, OKX is 25%, Binance is 19%, and from there really it's non-existent. But it's interesting to see. Now, when it comes to exchanges, like I've said many times before, there's many different exchanges out there, and it's important that you actually get yourself registered on as many as you possibly can. This sets yourself up for success in the future. Not all exchanges are going to survive the bear market, and not all exchanges will be available when you need to log on. There's going to be millions upon millions of people trying to log on to an exchange all at the same time to liquidate their crypto assets, and you might not be able to log on. Your website may go down, the exchange might just be too unbearably slow to use, and you're not going to be able to kind of liquidate the assets at the prices that you want to. So what you tend to do here is you spread the risk. You basically make sure you register to as many different exchanges as you possibly can. You get familiar with how they work. You onboard fiat, you withdraw fiat, you deposit crypto, you withdraw crypto. Do you need to link a bank account? Do you need to do KYC? You go through all of these processes and you make sure that you're ready and you set yourself up for success in the future. Now, BitGet is my go-to platform. I use this for 100% of my leverage. I use it for 90 to 95% of my spot trades. I think it's a fantastic platform, very easy to use, and it's one of those platforms where I signed up. It wasn't my intention to use it for everything, and it just turned out that actually it's that easy to use that I just made it my go-to. Now, it's not to say it's the only platform that I use. I have accounts elsewhere, such as Binance, KuCoin, Gate.io, Coinbase, Bybit, and so many others. But I find that BitGet is the best one out of all of them at the moment. So if you're looking to sign up to these exchanges like BitGet, check out the links in the description down below. If you do use the affiliate link for BitGet, for example, then you will be eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. What have you got to lose? Check it out, get yourself signed up, and set yourself up for success in the future. This brings us on and over into our trade sections, right? So as I'm talking about this, right, if I were to short XRP and I'm looking for this target range, bearing in mind that our structures are very much here, we have to kind of consider that, we are in this structure until proven otherwise, which basically means we have to expect this move to the downside, unless, of course, we can invalidate it by moving higher than 59.739. Okay, so in order to do that, we would short the market. Let's just take the market value at the moment. Our stop loss would be above that area, because if price goes above 59.739, then of course we're going to break our structure and we're not going to see this move to the downside, not as expected anyway. Our target range would be down here, so I'd go ahead and put it on the highest side of this at 39.214. I'd get a risk reward ratio of about 2.5, and that would be my approach to this one. I would not over leverage, okay, and I cannot stress this enough. Okay, I wouldn't be looking at anything above 10x. Probably a 5x would suffice, because this is a pretty meaty move in itself, right? We are talking about moving down about 27%. So it's not a small move, and you don't need many X's to really capitalize in on this move to the downside. So use proper risk management. Don't over leverage yourselves. Don't get yourselves kind of in that gambling mentality of just trying to, do 100x, try to get those 1,000% gains. Small gains over a long period of time with good risk management, good risk reward ratios is going to serve you much better than these kind of one-off 1,000% gains you might make occasionally. But in the process of trying to hunt for those, you're making loss after loss after loss. Set yourself up for success, and I think you'll be if you set yourself up for success using proper risk management, proper techniques and analytical approaches, you should be okay. But of course, I'm not a financial advisor. I cannot offer you financial advice. All I can do is give you my thoughts and opinions on how I would approach the markets, considering what is in front of us here. This potential trade opportunity is one that I may take, I may not take. I will see how things react later on today, because again, we are looking at a very volatile Sunday here. We're looking for daily closes, we're looking for weekly closes. There's a lot of things that could go wrong with these potential trades. So I'd much rather give this one some time to breathe, and we'll see what happens after that. Guys, I'm going to wrap this video up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.